What up, what up, what up, what up, what up, YouTube? Welcome back to another major market breakdown. I know it's late in Sunday, markets are already technically open, but you guys are getting the drop. I was moving around a lot. I have a lot of meetings and people to talk to these days, so that's why things are happening a little bit off schedule, but we're getting back right. We're making sure to get you guys this content. It's going to be a two-sided video just because we have to talk about the challenge account that we've been doing, the $20 to 100K. We're going to get into that later in the video, but first, let's go ahead and talk about these markets and what is going on. We're gonna start with DXY. As usual, as always, we went into this downtrend here with all of essentially most of 2025, right? And then we've been consolidated, and we finally broke through this. Sorry, I had to pause it and help my wife find the wipes real quick. But we broke through this 100.49, basically 100.5 level here, and we closed strongly above it. So we know that U.S. data is good. The jobs market isn't doing too terrible. I mean, it's definitely not great, but as far as relatively to a few other economies, it's doing good. So these are a few different factors of why we have the dollar actually closing like this, while at the same time we have like US oil going lower. Usually we'll see like US oil and really most olive oil and the US dollar kind of move together because of the petrodollar system that we're still on today. But because of the fact that supply chains are less constrained right now for oil, at the same time that data is good for the dollar, we see that kind of diverging in price action. And actually, we can go take a look at it. Take a look at it here. As you can see, just like straight opposites. This closing below previous consolidation, while the dollar is closing above previous consolidation. So we have a good environment. I've been seeing some analysts kind of throw out that these prices may stay elevated in this kind of this little section here where we were at not really elevated, but we're at like pre-war levels here. As you can see, this gap, we're gapped up right here off of all the BS. We're finally closing that gap in here, and since that's the case, we're actually seeing essentially Strait of Hormuz open, no more war talk. Oil is going back into the bearish trend that it was in before all this started. Because I mean, if you take a look, we have all this going on, and it's just straight down. Every rally was sold by investors here. So pretty soon, once we kind of show some consolidation and momentum to the downside, I'll be looking at more opportunities to sell oil. I'm just not super interested right now because we are still hot off the press when it comes to all of this Hormuz, Iran talk and everything. But let's take a look at gold, because we may, I think, see, since we're going back into those kind of 2025 data points, right? I'm thinking we may see a bounce here. I mean, seasonality puts us having a cool little bounce here on gold. Now we do have our Markov regime probability filter telling us that it's likely not gonna bounce that hard, so I'm not super interested in actually trading it, but we'll probably become more interested once we get closer to some of these other key levels here. I think we will get some more I mean, like, investors love the rally on gold, right? And a lot of these dips right here are now being seen as long-term buying opportunities. I'm not super interested right here, but we get more down into, let's get some marks here. We get more down into this like 3,500 area, and that's when I become like super interested. Now we may find some support down here at this like 3,800 level. I've heard a little bit of talk of it, but we'll see. We'll see. As far as right now, I do think that the overall trend is gonna stay bearish for gold, and we'll probably see some of these EMAs and our bird's eye bands reject off of some of these areas here. Like I might, if we can rally to 43 80 79 ish, if we can rally there, I'll be interested in sales. But I'm just not looking to buy this market because it's just so overall bearish. Like, yeah, we do see a bounce coming, but I don't want to sell it essentially. And then take a look at our Forex pairs. There's some opportunities. We made some really good money in sells last week and the week before last. At this point, I think we'll take some more liquidity up under this low and then rally to the upside, similar to what I'm seeing on gold. Now this here, I'll actually be more interested in trading, just because it's a lot of liquidity, but not as volatile as gold will be, so the swings won't be as big. But I don't even need to grab that actually. Just kind of delete that there. Any liquidity under here getting snatched, I'll see as an opportunity to buy. But I won't buy too heavy. I'm not gonna be buying too heavy. I'm not gonna be buying for a very long time, just because the dollar is still on a rally, right? So I don't want to be buying too hard against the dollar, and I'll honestly be trying to find some better opportunities like AUD. I'm still in some AUD sells here, but I'm probably gonna end up taking profit a little bit sooner than I like originally anticipated. If we start seeing a bounce here, it's probably where I'll decide to trail stops into profit, and likely pretty soon after just take profit on this trade. It's not necessarily a bad trade, but with things being a little bit more overextended, and we have some data to come out pretty soon to give us some more clarity on the full direction of the US dollar. AUD USD is gonna basically move pretty close to gold. It's like an 80% correlation to gold. So if you're looking at gold positions and you actually don't want to trade it, AUD is one of the better assets to go along with it. And then just to get into one of these crosses real quick with y'all, AUD Chef, I still love this. Out of all of the setups that I'm actively trading, I love this setup the most. I'll be looking for more opportunities throughout the week. If we can, get any kind of rallies, I'll be looking to just add a little bit more to my position. Like if we can get like a little bit of a wipe right here to fill in that little wick that was made on the hourly, I'll see that as just another opportunity to take this lower. This is actually one of the trades that came in on the bird's eye bands and was confirmed by the bird's eye tool, as well as some a little bit of a fundamental bias from our edge finder tool. Shout out to A1 Trading. Share this tab so you guys can see. This is the general bias. Let me go. Actually have the wrong page pulled up. Go to the top setups page, and you guys can see here. Well, it's not actually. It was getting a more of a bearish pull down here. AUD Chef. Oh, there it is. Now I'm just blind. It's right here. It's right here on your screen. I kind of just looked past it. But yeah, we're still getting a -7 on AUD Chef. Let me switch the account so I can share this screen with you guys. Yeah, basically everything except the job market comparison is kind of letting this market fall. All right, so we have a bunch of confirmations, and it's why we developed the bird's eye tool and the bird's eye bands, and we purchased the edge finder so that us and our community can always be tapped in from a technical, fundamental, momentum, and institutional standpoint. It kind of keeps you locked in on where the markets are going. All right. I won't go too deep on all of that stuff. You guys can get into the free community and get more info on all that. But just to switch gears a little bit, let me pull up Telegram so I can show you guys the updated account. Actually, no. Let me just go straight to Trade Locker on my laptop here. Alright, let me share this tab instead. Alright, so you guys can see total P&L $72.05. Current balance is $58.20. That's including that little withdrawal that we had did the very first week of the challenge, because we had that $30 trade, and it was a great trade, but I didn't mean to take it on this account because it's not meant for this challenge. I'm not trying to show you guys super risky behavior or anything like that in the charts. Why are you not loading? My chart wasn't loading. But yeah, so these are the size trades, not super. That was, as you can see, this is a little $30 trade, but for the most part, keeping it pretty consistent. We made about 8.5% last week, if I'm not mistaken. The goal is 10% every week and 5% at a minimum, and then bare minimum, just not blow the account, of course. Protect capital. That's the biggest thing that I'm trying to show everybody with this. Is that you can take $20 and you can actually turn it into reasonable a reasonable account size that you can take withdrawals on. I know there's going to be a lot of people that there's a lot of people going doing the challenge with me, and they're probably going to stop at like 5-10K, something like that, and that's fine. By going along this little journey with me, it's just going to help you guys understand risk management better at a higher level, because if you can do it with a little bit of money, you can do it with a lot of money. All right, and all these moves are going to be the same moves that we're making when the account gets bigger. We're just going to be sizing up the trades a little bit to go along with the account balance, so that the risk to reward stays the same all the way up. All right, but not gonna talk you guys head off too much. I love y'all. Make sure you're kind to somebody today. Hit all those links in the description. I'll catch y'all on the next one.